Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
Financial Survival Network is presented to you by Regal Assets. Buy and sell physical gold and silver through your existing retirement plan, 100% tax-free with Regal Assets. If you want to include physical gold or silver in your existing IRA or old 401k, request your free investment kit, which was recently featured in the Forbes and Smart Money Wall Street Journal magazines. Call toll-free 855-678-6620, 855-678-6620, or visit regalassets.com. Today's sponsor is Audible.com. They're a leading provider of spoken audio information and entertainment. Listen to their audiobooks whenever and wherever you want. You know, I do a lot of driving. I'm always listening to an audiobook, and I love it. I couldn't live without Audible. If interested, go to audiblepodcast.com/Lutz. audiblepodcast.com/Lutz. You're listening to the FinancialSurvivalNetwork.com. I'm Kerry Lutz on 1590 WPSL. Gold, another down day. Down over $10 the ounce. Silver down as well. When is this bottom going to happen? Are you ready for it to happen? Will you believe it when it does happen? It is going to happen, and probably sooner than later, which is why David Gurwitz of Charles Nenner Research is on with us now. David, welcome back to the Financial Survival Network.
Kerry, it is always a pleasure to chat with you.
And you know it is too. So a lot of people have been having, shall we say, psychosomatic health effects from the recent plunge in the precious metals. Do they go to the psychiatrist, or they just hold on to their metal and wait?
Let me tell you a story. One of our clients sent me an email. He said, you could stick a fork in me because I'm dead. I didn't listen to you about Apple. I didn't listen to you about gold, because we told everybody to get out of both. So he's a very funny guy. He's not a poor guy, so I'm not picking up a collection for him. But what can I say? I mean, we kept everyone out of both. We told, and the reason you and I were talking before about both, so let me try and tie them together in terms of a mindset, okay? Because gold obviously had a 7-year run-up after a multi-year flatness. And then when it got to 1900, Charles' system showed a top. He said, stand aside. We believe it is going back up and surpassing that. But like a lot of people said, well, I've been in for 7 years. It's been up. I'll just live through it. And he said, it's going to be very hard to live through it, because you'll start to look and see that your value's down. Your value's down. And just psychologically, why go through that? And then, you know, same thing with Apple. We called it the bottom at 200. We didn't stay in the whole time at 7. He was in and out. He's have to admit it was not a straight in. But when it was in the 6s, he said, buy puts when it gets above 7. 80% of analysts stayed long. And obviously the amount of loss was great there now, and no one can imagine it'll go up again. There seems to be a mindset to forget the past, and our whole theory, our whole system is based on the fact that the past repeats. So not only don't we forget about it, we actually try and see the pattern from the past to predict the future. So yes, gold will go back again, and it is bottoming. The question is it a U bottom, which is like the letter U, as we all know? Is it a V bottom, which is like a hard basketball dribble up and back, which you can, Kerry and I love to talk about basketball.
Mm-hmm.
And is it a W bottom, which is not just the middle initial of one of our presidents, but a down, up, and he's not sure right now. And that's why he's standing aside still. Those who are in, it might be more painful till the end, another 5 weeks, till people want to buy puts when they've been down for a year after being up 7. Most people who've been in for a long time have probably got it for lower than where it is now. So they're still up, but I don't know. So we definitely, anyone listening to the site, Kerry, should write to charlesnenner.com and say they heard, me talking to you, and we'll send them a free set of research for a while and send them the gold charts from the last 2 weeks to show them that cycles show that they are going up for several years. So that is what we see. And we've kept everyone out of 1900, so we may be right. I want to add, he told everyone to short copper. Copper's down, which is an indication of the overall economy, which is why stocks...
Yeah, Dr. Copper.
It generally works. Not always, but generally works. But stocks are topping after having been in a buy signal for a long time, for more or less 4 years. And stocks are going to start their 7-year descent, believe it or not.
7 years, huh?
60% lower than today. The Dow should go almost 70% lower over the next 7 years. Gold's going to be up. I know what you're thinking, because I'm already answering them, But that's kind of why it's hard when people get shaken to think straight. And we understand that. That's why our attitude is when cycles are up, don't be short. And when they're heading down, don't be in it to have to live through it. But it's not easy. People stay invested. They watch too much media. They listen to too much media. So they get affected by it.
Yeah, isn't that the truth? And I thought one thing that was interesting, you said for the past 2 months that the probable low in gold was going to come towards the end of April.
Correct.
And there was that one decline in the beginning, I think it was towards the end of the first week of April, and everyone thought, oh, that's the bottom. And then last Friday and Monday, boom, it really gets killed. And then I said, you see, he was right. I think the numbers you were talking about weren't that clear, but the actual direction was really clear.
Right. So there's two pieces. There's direction and level. And our ideal is to have them both line up. Now, we look at a lot of stuff. When you go to the doctor and you hurt yourself and he takes a lot of x-rays, he's looking for a sprain, a fracture, a bruise, a contusion, or nothing. And so imagine taking a lot of shots, visual shots of the market. We do cycles. Which are repeating tops to tops in any data series. We do Elliott wave, which people think they know about, but not so simple. We do target algorithm, which is, again, a very complicated mathematical study based on really quantum physics and decay and trajectory of shooting a bullet out of a gun. We think markets follow basic physics concepts, okay? We do point and figure. We do a channel analysis. Charles looks at all the stuff. And so when it all lines up, it's a 90% trade. It doesn't usually happen like that. We had a target, like Apple, the first target was 5. And then he said it would bounce from there, but only a bounce, and then would go lower. It's exactly what happened. Gold, they had a target of 15-something. It hit it exactly. It bounced, and then the timing said it ain't bottomed yet. So we still have a bottom at the end of April. The question we don't know is whether that is the bottom, and it might be, followed by a second bottom at a higher level, a month later, because it does undulate these patterns, or is it just a bottom on the way to a lower bottom? We don't know that yet. But for sure we wouldn't be in. It's very hard to advise people saying, I'm in, what should I do? Very hard. Because they're asking us to give them a medicine on something we wouldn't have had them, eat the food in the first place to give them stomach aches. Mm-hmm. If I could use a food analogy, I am Jewish.
Sure.
I do think about that stuff,
Hey, I'm a foodie myself, and
so.
I'm thinking about dinner already. And yeah, it's just really interesting. So it's a little too early to tell if this is the bottom, but it made such a vicious bottom,
right,
that it could well be. I mean, it's unusual to have that kind of violence for a double bottom.
Well, it's number one, it's unusual. Number two, it's unusual that it doesn't go back up afterwards. Mm-hmm. So that's why people should try and not capitulate. But
right.
It's hard. I have a lot of Australian clients, which you do also. Mm-hmm. They stayed in.
Yeah.
I have a bunch that stayed in, and I told them to get out. Mm-hmm. They didn't. So what do you do now? Wait. It's hard because they're battered.
Yeah.
After a good run. I mean, they're still playing with the house money, but people, Kerry, they forget that they're still playing with gains when you're getting beat up under the basket, right? Charles Barkley's still all over you, It's not so simple, even if you're up by 20. You were up by 50, Yeah. So that's kind of the mindset. And our attitude is, why put yourself through that? I may be missing something. And that, to me, is the biggest problem with all investors. I might be missing something. And I understand if you're a hedge fund, you're trading, you have to outperform, otherwise you don't have business. If you have a personal, I'm sure you have a lot of personal clients listening, we try and advise them, and they're welcome to write to the site and take a look at the newsletter. And just there are times you don't do anything, and that's very hard for people to do nothing. And that's what we're saying. And then we tell them actually wait till May to buy grains, because grains are bottoming. Wheat and corn. How many people think to buy JJG or to think to buy, grain stocks? Not too many. Or currencies. The dollar's strong till July. Will go down, then up again, and then it really crashes next year. Whatever effects people think that has, I'm not so sure. A implies B. Like if the dollar's down, will the Chinese sell all their bonds then? Because they're holding bonds in U.S. dollars, and the dollar will be weaker, so it'll be hit currency-wise, and then rates are going to start going up this summer, we think. So then they'll be losing value on the coupon. So they're not going to be happy with that investment. They'll start dumping it, which is what we think is going to happen. So bonds are a great place to short starting in the summer. Mm-hmm. So you have a lot of stuff coming. That's why people are thinking gold's going to stay down. I'm not that smart to put all that together and say gold will stay down, bonds will start crashing, stocks will go down, silver and gold, kind of the same story. It's unlikely. But we don't think that way. We tend to think, what do the gold stories say? What does the silver story say? What do the stock stories say? What does the copper story say? What do the grain stories say? What does the bond story say? What does the euro story say? What is the yen? We look at each set like scientists, because we are scientists. Mm-hmm. And that's what it says. And we show everybody. We don't manage money, so we don't have that pressure to, perform in that regard or ask people for money. We charge them monthly to give them our advice. But our really, your listeners are obviously quite interested in your vision, which is, as I've told you, online and offline. You have a very clear vision. And what you wrote, the book you wrote, which was great, which I actually read,
There's a few of you out there.
Not in 2 minutes, man. But there's a lot to say. I didn't know 80% of what you said. You taught me a lot.
I want to welcome our new sponsor, Audible. I've been listening to audiobooks from them for over 5 years now. I am a huge Audible fan. In fact, I've bought multiple Platinum memberships. Platinum membership, you buy 25 audiobooks at a time. I just got done listening to the first 3 or 4 books of the Jack Reacher series, the one you probably saw, or maybe you didn't, in the theater, Tom Cruise movie. I mean, just a wonderful book, wonderful series, expertly narrated, and so many times I'm in the car, I get sick of listening to music or news or the radio. I just put my iPod on, plays the book, and makes that trip go by so quickly. To me, this is one of the great things of the information revolution of the internet, is that you can get over 100,000 books on your iPad or iPod or iPhone instantly. Another thing that they have is courses on Audible, the Modern Scholar series. And I've listened to lectures about World War I, Shakespeare, nanotechnology, detective novels. It's so enlightening. To me, Audible is a must-have killer app for the iPhone, the iPad, for my computer, wherever I am. I'm always downloading these books. Like I say, they're a sponsor, so check them out. They've got a free audiobook and a 30-day free trial membership. Just sign up at www.audiblepodcast.com/Lutz, Lutz. Again, audiblepodcast.com/Lutz. Sign up today. Like I say, this to me is a dream sponsor. These are exactly the types of things that I like to pass on to you because I'm such a fanatical, over-the-top Audible user. 5-6 years I've been listening, hundreds of books. I used to think I was a well-read person, and it's a little strange when somebody asks you, did you read that book? And you have to say, well, somebody actually read it to me, but they actually did a better job than I could have, so I don't mind it. But my friend Sean Perger up in Vancouver, he listens to almost as many as I do, and he can't get enough. I know you're going to love this company, love their service. I do. So check them out. audiblepodcast.com/Lutz.
And so people hopefully are thinking, and we like to present, as I think you know, a unique way of thinking that I don't think anyone out there really does.
Oh, that's for certain. I mean, I'm just looking at the last report that I got. And crude, crude and natural gas, I follow them a lot. You kind of have a miss on nat gas. You were expecting it because the longer term trend you said was down. And
no, but we're short term long.
Yeah.
Oh, no, that's not a miss. Funny, nat gas, he called from $6 to $1.70.
Right.
And I don't know if I said this the last time, I'll say it again. I was on TV in Canada last week, and I was explaining to the person that asked on they have this show with these two people. One's called Kevin O'Leary. He's Shark Tank.
Oh, yeah. Sure.
And he's long TBT already. It's painful. I said to him, if you had known us 6 months ago, we would have told you don't go in that trade yet. It's not so complicated. And then the other anchor, very nice person, Amanda Lang, was saying, well, but had events happen, how does doesn't that change things? I go, let me tell you the nat gas story. Charles called nat gas $6 to $1.70. Nat gas top. The banks had lent money. The Canadian banks had lent money to nat gas producers, Western Canada.
Sure.
At $5 and when nat gas was $5, went to $4, then $3.50, and all of a sudden the bankers had underwater loans, right?
Right.
It's like a mortgage in a house. If it's $500, they lend you $500, and all of a sudden it goes to $300. Their loan is underwater, and they're getting pressure. Same thing with loans to non-houses. So there are 5 major Canadian banks, and I think 3 of them had made these major sets of loans, and they started to get pressure. So they forced their nat gas companies to pre-sell nat gas, even if they didn't have to start repaying the loans, drove the price down even more. So I said, what came first? Was it the bank action, which is what the news would say, banks forced nat gas companies to sell, price came down, or was it the cycle top? Obviously, we think it was the cycle top. And that kind of is the overlay to everything we do. And that once you understand that, it's what you get comfortable with it. So long term, we think nat gas is going back again to its lows. It's in the mid-4s. Are we recommending buying a put now? No, because it's not at the top yet. Crude, we think, is going to 105. He has a target of 118 after that. He also thinks wars are bottoming, which kind of tie in with that if you want to think that maybe there'll be a tax on oil refinery, whereas crude is a whole other game now with fracking. So there's so much, it wasn't this way 3-4 years ago. Now that's the quote-unquote fundamental analysis. We don't know if that's the reason. We just know cycles say one thing, and that's what tells us until it's proven wrong. We keep following it. It seems to work.
Yeah, one thing I've been following a lot is the euro.
Yeah.
And, man, that thing is, it could get you nauseous, because if you follow those stories, there's absolutely no hope for it. And the only surprise is that it hasn't blown up already.
Not to us.
And yet, looking at your cycle work, it paints a totally different story.
Correct. 8 months ago, 10 months ago, people were begging to short the euro. Charles is Dutch. It's not like he doesn't think about the euro. I mean, he's European. I remember calling and go, I also see it stinks here, but cycles are bottoming. What do you want from me, right? So that's all we're saying. I think people should throw out their TVs, not read newspapers, read our stuff, and then work backwards. But that's not going to happen. So at least we're an offset to maybe what's going on. I think people think too much about cause and effect the way they're taught. When Charles was at Goldman, he said a lot of people didn't really. Look, Goldman always had tremendous info flow from being the market maker.
Oh, yeah.
So they traded a lot of stuff. They still do based on that. So when people leave there, they're not always as successful as there because they don't have the deal flow, right? So, just because people think something, the guy says something, the anchor says something, doesn't mean that's what's happening. We beg to differ, as we say, but, certain people get it and certain don't.
Yeah, like one interesting thing on the gold sector is you had that huge mine collapse in Utah, Rio Tinto's Kennecott mine. I don't know if you've ever been there. It is an incredible work to behold. You just never seen anything like it. It is so huge and vast. And that was 35, 40 years ago when I was there. It's probably twice the size now. That eliminated 10 or 15% of the U.S. silver supply, 7% of the gold supply, 11% of the copper supply, and yet none of it is reflected in the prices whatsoever.
So what causes prices to go? And that's our attitude, that it's all set already. The events, it's not the event, it's the interpretation of the event.
Mm-hmm.
That's a big thing to think about. That's what cycles seem to say. Charles always used the analogy, IBM has great earnings. Depends what the mood is. If cycles are topping, people will say, no, it's not going to go anymore. Let's say cycles are bottoming and they have great earnings. Well, we think there's going to be a boom, there's going to be new tech. So it's the mood of the recipient of the information is what we're measuring.
Yeah.
In effect, it's all mood. And that's why sunspots topping, right? Which you can go to the NASA site and
that happened in 2012, right?
They're topping now, and they're down for years. So according to that, people will be quote unquote more depressed because they seem to be more exuberant with a higher number of sunsets.
Yeah,
I don't make this up.
It's warmer out for one thing.
Well, that's a separate
fact.
thing. Charles doesn't tell about that. He thinks there's global cooling, but that's a separate discussion.
Yeah, because the sunspot cycle is down, and the temperatures are going to be down as a result. So when it's colder, this is what there's one guy out there who's been the pro at predicting long-term weather patterns.
Really?
And
Who is that?
I can't remember his name, worked for NASA. He's the number one weather forecaster on the planet. And he said that 2012 was the peak of the sunspot cycle, and that we're going to be seeing colder weather, which is going to have devastating impact on food, on energy, on so many different things, but also on mental state, because I think people are happier as a rule when it's warmer out. So this is going to be an interesting thing to see, because I do believe that the warming cycle is over, and every statistic they're publishing now from NASA, from all the climate research centers, is indicating that the warming cycle is done with. So
interesting. Kerry, could you send me some stuff when you get a chance? I'd love to see it.
Yeah, I'll have to dig it up. It was a fascinating article.
Really?
And, it really, he didn't look at it economically, but from a food standpoint, you would have to say, and from an energy standpoint, if it's colder out, if it's a few degrees colder, you're going to be using more, which we saw in the Northeast with nat gas this year. Part of the reason it stayed up, and also, aside from the cycles, also all these power plants are switching to it now.
Right.
Every non-nuclear power plant in Florida, except one, which they can't convert for some reason, is now on natural gas.
Yeah.
So, long-term contracts, they're saving a fortune, and just makes sense. But yeah, these cycles definitely are at play. They're something that most people really you're not cognizant of, because you don't focus on cycles. You just focus on today, and you don't think about a cycle. Obviously, if it's a down economic cycle, you can't very well ignore it, but the cycles come and go, and you just live your life.
Right. Well, I'm going to add to what you're saying. We do always pay attention to cycles. It's called weather.
Right.
We know summer's coming in the north, whereas in South America, it's, the southern hemisphere is a different game. We do live that. That doesn't bother us. We expect summer. It's not going to snow. Well, meanwhile, it's snowing. It's snowing in the Midwest now, but in general, it's not going to snow May, June. And then it will get colder in the fall and start to snow. Cycles are no different. It's just never been really studied and accepted, and I don't know why. Charles and I talk about it all the time. We can't figure out what it is that they just can't gain an acceptance. I mean, he was just on CNBC a week ago, less than a week ago, and I spoke to the person beforehand as a pre-interview, right? And I'm laying out the whole thing. And so then when he gets on, we had the Boston thing, and we had he was at the New York Stock Exchange, so they had a fire drill, and they wound up asking like 4 minutes of questions, and so they don't get into anything. And the news people are watching, I think it's designed to get you crazy. The way they do it.
Yeah.
And so it's very hard for people, I find, to think that way. We have a lot of clients. I talk to them about all this, because you look back to his calls when he called it, the Dow from 10.8 to 14.5, went to 14.2, got out in the summer 2008, went long 2009, all this time, give or take a couple of times, and now he's really afraid. So why wouldn't someone say, maybe you were right then, I should really cut back on my equities? Because they feel they're missing something, right? Or bonds have been for 30 years on a 18 down to 0 rates means bonds have gone up. It's going to go the other way now. How to plan that's very hard, because what do? You buy TBT or you short bonds. No one's I shouldn't say no one, but most people have never really shorted bonds. Gold, your thing, 7 years up. We got a little kick up now. It's going back up. I'm framing a whole portfolio now. Silver, same game. Copper, different. Copper's down. You're right. We have a bunch of sovereign wealth fund clients that do billion-dollar positions because they're sitting on $8 billion. They don't ask us for next week. They ask us 3 years from now, 5 years from now, 10 years from now, because we feel we can predict it based on the past. Currencies, the dollar's going to get really beat up. What's going to replace it? Another question. That's not such a simple answer. I don't mean replace. It's not going to be replaced. What's going to be held in esteem? Canadian looks better. The Aussie looks better for some reason. Then you have, obviously, grains. So if you put the whole picture together and you have bond rates going up and grain prices going up, you're going to mean the borrowing costs will go up, and so the municipal bond things will all go up, and then food costs will go up, and oil's going to go up. It's, your pocket's going to feel a bunch of stuff. It's going to be so pretty. Mm-hmm. And that's kind of what we see. And it's interesting, war cycles are bottoming, and, the sunspots are topping, and obviously the Dow's being all done. It does make sense in the whole picture if you put it all together. What do you do about it? It's a whole other thing, and we're not such experts. We're just showing you what's going on, what to do. Will financial institutions be around? If you put on a great trade for 3 years, will they be around to go on to the other side? I don't know. And yet at some point down the road, according to us, it turns around and becomes a better bull market than it's ever been.
Right, that's remarkable.
So the whole thing's, that's the big picture, Kerry.
Mm-hmm. So you just have to live long enough for the next bull market to take off, and it'll take care of everyone.
Waiting.
Yeah. Yeah, that's it. You got to stay solvent until the next bull market. And that's
in the
really
right bank that doesn't go out of business.
The right too big to fail that is eventually going to fail.
So I don't know. I don't have those great answers, but I look forward to you people writing in. We so enjoy talking to you, and I got to run now. And,
all right, so KL@KerryLutz.com, KL@KerryLutz.com. You got any questions for David or Charles, just shoot them in. I will forward them, and we'll talk to you again in a couple of weeks, and hopefully gold will have bottomed, and it'll be off to the races.
Hopefully bottomed for a lot of people, but if you're short, get out of your shorts then,
Yeah, it's time to start thinking about closing out those shorts for sure.
But not yet. I know this I can't advise. This is really hard right now. We wouldn't be in, so it's very hard to advise right now.
Hey,
please write in for the research so people could watch it, because they don't have all their money in gold.
Yeah, remember what
they had
remember what Bernard Baruch said. I got rich letting the other guy make the last 10%.
Right.
Yeah. Right. Yeah. So on that note, just give us your web address again.
CharlesNenner.com.
All right, and you can always find more info, financialsurvivalnetwork.com. Don't forget, we're having our conference, Dallas, Liberty Mastermind Symposium, June 28th, 29th. We'll see you there.
Great.
When it comes to buying physical gold and silver, Regal Assets is the place to go. Did you know that you can use your existing retirement plan to invest in precious metals and it's 100% tax-free with Regal Assets? I hope you're seriously thinking about using precious metals in your retirement plan to help you beat inflation. It's so simple to use your existing IRA or old 401k to set up your precious metals retirement plan. Request your free investment kit today. It's so helpful and informative that it was recently featured in Forbes and Smart Money Wall Street Journal magazines. Get the latest info by calling toll-free 855-678-6620. That's 855-678-6620. Or visit regalassets.com and use the code Lutz. You'll save the setup fees and a whole lot more at regalassets.com.